Hello everyone, great to have your company here on Kalkine TV. I'm Rachel and you're watching the Buzzing Trends. Now, the Australian share market saw a sharp increase in the number of companies in 2022 compared to 2021, with many analysts forecasting huge growth numbers in the future. Buy-now-pay-later company shares, though, have been among the most affected in financial year 2022, with a couple of market leaders shedding over 90% of their value. The Australian benchmark ASX 200 index plummeted almost 10% this year. Several factors negatively impacted the ASX BNPL players, including increased competition in the sector and a series of interest rate hikes amid rising inflation. In February this year, buy-now-pay-later giant Afterpay left the Australian Stock Exchange after Square's parent company Blocked snapped it up in a deal worth $39 billion. Soon, another BNPL company, Zip, offered to snap up its competitor sezzle in an all-scrip acquisition. However, that deal has now been terminated. In other major developments, one of Australia's top banks, the Commonwealth Bank of Australia, launched StepPay, while the National Australia Bank announced a similar product back in May. Not only did domestic players launch new products, but global giants such as Apple also entered into the space with Apple Pay, later heating the competition in the BNPL space. Let's look at the performance of a few buy-now-pay-later majors in financial year 2022. Zip slipped 91% and Block dropped 45%. The Hum Group fell 55% and Sezzle declined 97%. Lastly, Plummeted shares plunged 68%. So how have interest rate hikes impacted the BNPL industry? Well, the Reserve Bank of Australia followed the US Federal Reserve steps after Australia's inflation climbed sharply. In financial year 2022, the inflation rate rose to over 5%. Generally, tech stocks face more pressure with the rise in inflation, leading to higher bond yields. The increase in yield makes the future earnings of tech firms appear less attractive. And as a result, investors substitute tech stocks in their portfolios with value stocks, which are more deeply linked with the economy, inflation and interest rates. The ASX 200 Information Technology Index and the ASX All Technology Index fell over 30% in the last 12 months. Additionally, surging inflation has added to the woes of users who face difficulties amid the rising cost of living. With an increasing number of Australians resorting to BNPL to support their standard of living, it might result in a sharp rise in bad debts. So to sum it up, buy-now-pay-later industry players saw huge growth due to people being able to split the cost of something and pay it over time. The pandemic also contributed to the sector's growth story, but this reversed this financial year. Many experts have predicted the industry to grow annually. Still, it'll be interesting to see if buy-now-pay-later companies aim to achieve sustainable growth and implement strategies to combat rising inflation. That's the latest from the Buzzing Trends. I'm Rachel, signing off for now.